Okay, cool. So we should be live. Um, I don't know what's kind of going on with the different stuff. Let me see. Okay, it sounds like my audio is going through and stuff good. So we should be live, like I said, on YouTube now. I'm gonna go over a top-down analysis of NQ here over the next like 30 minutes, maybe 20 minutes. Won't be too long, just kind of short and sweet. I'm gonna wait here about 2 or 3 minutes to see if there was a couple people that had messaged me that had a few questions that to let them hop on. Otherwise, this will be recorded for people to go back and watch. But like I said, what we're gonna pretty much go over is the understanding of the higher time frame bias of what we were looking for on NQ, so MNQs, whatever you wanna, whichever one you trade. And then we're going to look at we'll look at the futures market in general, but our real focus will just be the top-down analysis for NQ. So just understanding, like I said, what we were seeing for that higher time frame, uh, the executions that we actually took, and then the areas that we were wanting to see delivered. So let me know. Let me see here. I'm pretty sure it's clear, so I'm gonna, like I said, wait about 2 more minutes, and then what I'll do is I'll go ahead and go through the breakdown here. And yeah, I don't know what's going on. I don't know why it disconnected anything. I don't know why because I use OBS almost every day. I used it earlier this morning and stuff like that. So I don't know if it's when I changed the name of the YouTube channel or what it could be. So now we did just get that new market open, so we will see some other price. So what I'm gonna go ahead and do is I'm gonna go ahead and start jumping into this just because, um, like I said, I know we're about to have some new price print. So coming into today, what I was personally wanting to see when it comes to your NQ is I wanted to see if this was like where we started the day at. So what I wanted to see was could we possibly move up into that 24,950 level inside the fair value gap, inside the imbalance, inside whatever you want to call that level, the inefficiency expansion, whatever, right? Just wanted to see price move up into that level. And so when you look at like a 1 hour and a 15, right, to like jump down to like the smaller time frames, we'll go over more of like the area that I took um, first, and then what I kind of anticipate going for tomorrow as well, since we're already open. So I anticipated to already be into the stream about 30 minutes at this point. So, so looking at this though, like I was talking about on that 4 hour, what I was really wanting to see was could we come up and reach through this liquidity spot, right? This was a big level of liquidity, 25,100 that I had been identifying for a while now. And then just looking at that level, I was actually wanting that level yesterday, right? Or Monday, excuse me. I was looking for the buys at New York, right? We were looking for that price to run up and to deliver that high, and all we essentially did was just make more liquidity. We made another resistance touch, let's say, essentially in this area, right? So this basically became a level of stop losses, right? So sellers stop losses that had built up in that area, and then we were looking for today for price to come on through and push through that area. Now, one thing I really focus on is going to be the overnight price, and so I am in the chat as well. I can see the chat here on my phone, so if you guys say anything, I'll be able to answer this question. So, like I said, we're kind of working through a little bit of technical difficulties at the same time. But so coming into this, all we could really see to start the day before 7 a.m. So this would have been 6 a.m., this would have been 7, and this would have been 8. All we could essentially see was this, right? This was the 7 to 8 a.m. candle. So this would have been 30 minutes before the equities open, and we already had price making higher highs and higher lows. Right now, remember, like I said, what I really focus on is going to be the overnight players and where their liquidity is and where their trailing risk is, right? Because that's going to be areas that we're going to be able to capitalize on. Yo, what's up, bro? Yeah, let me know if everything is good, Chad, too, because it's kind of being weird today. I don't know what's going on. But the initial balance low, so price overnight just started making lower lows and lower highs, right, and just started breaking back down. Now, one thing you want to pay attention to, though, is like where that started, right? So, like the start of the day was here. And then as you can see when you're looking at a 4 hour time frame, we started to make our way down right here, but where do we make our way down to on the higher time frames of things? If you guys, okay, cool. So if you guys understand like ICT concepts, smart money concepts, some people are going to call this an order block. You know, we call it a demand candle. And so like the 4 hour demand candle was being respected, right? And they were coming down into the 50% of it. So we were taught to measure this candle with your GAN box and just kind of have an understanding of volume and just where players are. Everything below the 50% is where we want to see buys on a situation like this in this candle. And so we started to see in the overnight, before we even came onto the charts, that buyers had already stepped in and set a legitimate low at that IB low at the 24,500 level. So when I see that, I already know most likely if we have an upside target and if we can look left and see a range from here like to here like this, that we're going to most likely see a really, really nice expansion day up to the supply area, or we're going to see like a bullish continuation day. Now, some of the hardest days to trade are bullish continuation trades, because what they do is they trick people. They build the price up overnight. They create new high on days here, right, with this candle closing like this, and then they make you feel like, okay, cool, like maybe we are inside this 4 hour fair value gap or imbalance, and we could see price roll back into the IB low. So in a market like this, you know, you'll see online a lot of people talking about, you know, the markets are crap, or are fair value gaps, are they done, or is no, it's just market environments. As the every 3 months, the market does kind of have like an environment where it kind of shifts and different players and just different things kind of happen, and so you just have to be able to adapt to that. And so one way I would say that you could do that is to have your expectations to be a little bit lower on what you're looking for that you're typically producing. So like if you're typically producing like 1 to 5 Rs, so 5 Rs trades like winners, then maybe you look for 1 to 3, right? You're looking for like a 3R situation, so that you can have less time in the markets and be less susceptible to risk. Okay, and so higher time frames, just to kind of go over the quick bias, because I kind of did go on a rant there for a second, is we wanted to see the fair value gap filled. We wanted to see the bullish continuation, since we've taken this low here, right, 24,000 like 450s, and we started to show signs of strength. We wanted to see that move up into the key level of supply on the 4 hour. Okay, and so now when I jump down into like a 1 hour and a 15, now we can start to see our 15 and a 5, right? We can see the intraday price a little bit better, right? And so when I came into this today, what I was really looking for at that New York Open was, I was kind of anticipating like some chop, but because we had already made our way up so fast in the very first 5 minutes of the New York Open, and I already knew what I was looking for by looking left at the higher time frames, I was actually anticipating sells, right, back down into the 15-minute demand candle, right? And so what ended up happening for me is I actually played pre-New York, which was something I usually really don't ever do. But when you look at the area that I was actually looking at, it was a really good setup before this candle printed, okay? And so what it looked like essentially was we were coming in, right, 7 a.m. to 8. We made this high here. Price came up and failed to break through that 24,900 level around 7:45 a.m. I said, oof, I wish I would have took that one, right? That was, way, way, way before the time that I want to look for a trade. Now, the one that I did like, though, is when we came into 8:15, right? This is a 5-minute bar and a 15-minute bar on the left. When we came into the 8:15, this was 8:15 to 8:20. Now we started to break down in this area, right? And so what I was anticipating going into the New York Open is if I could find a 1 to 5R where I could cut at that 1 to 3 moment, right? So we were looking for about a 1 to 5R. Now, when you look at that, if you're looking on the left side, right, higher time frame, what I was focused on was getting into this order block candle, right, or getting into this demand candle, whichever one you want to call it. It's our reference point, right? And so I just wanted to see if I could, take this short from here, right, down into that level on the 15, so 24,800, like 24,750s, like somewhere in that area, because essentially what I was wanting to happen, if I want to see that bullish target delivered that we ended up seeing, right, 25,000 and higher, or 25,100 and higher, that's where I have this arrow to right here, as you guys can see. what I was wanting to see happen before this happened was price kind of go down like this. Let me make sure it's on both of these here really quick, and we'll actually use this because this actually works better. I was wanting to see price kind of come down. If you guys are looking left, right? I was wanting to see price come down, make its way, do something like where it takes, hits this 5 minute demand area, rallies, and starts to build back, so that we could make our way back up, if that makes sense, in this zone here, right? So that's basically essentially what I was looking for, and that's why I shorted a little bit early. Now, when you look at this move as well, the area that I had was like the 94s, and so you always want to know where your 1 to 3 R is going to be. And so 1 to 3 was like right here in this area. So why I was able to still be profitable in this trade was because in this next bar, we actually we actually went down to this area, and I had already went break even. So I was like, oh god, it kind of scared me there. But I had already went break even because it was before a pre-New York equities open trade. So I would say, in a sense, kind of got lucky on this one. But if you guys are following like our telegrams and stuff like that, I have basically said, short, and I'm gonna be break even as soon as it goes in my favor because it's before equities open. So that was the first area. So I was like, cool, still break even for the day. No big deal. And so now we have the massive push up, which I was like, oh, that's exactly what I want to see, right? But when we seen that, it turned into a 15-minute wick. So I know that 15-minute wick is going to be a 5-minute fast up candle. So essentially now at this point, what I'm looking at, I'm like, okay, well, if we're still, we want that upside target, but we still have left this essentially kind of open, right? What I was looking for was maybe we could have this big candle here on the 5-minute, like this, right? So this is the candle we were looking at, and then I was going to see if on the right side of that we were going to sell off, right, after delivering that 24,950 level. See if we were going to sell off and come into the demand 24,750 and maybe even lower back below the daily open and start to come back into the initial balance, right? And potentially, if we were going to sell off, if we're going to come back to daily open and go below market for the weekly, then I was like, okay, we're going to go below IB low, right? But that did not happen, which I was patient enough to wait for that because I was like, well, I don't really care to sell as much when I have that upside target. And so price did go ahead and extend higher. I believe here is like 9 a.m. 9 a.m. came out and price peaked higher, and then you had a 9:05 to 9:10, the body closed higher. So at this point, right, when we came in here and we look at this, even though I wanted those shorts, we were clearly bullish going into the end of the day. Right, so we had already rejected, closed higher, bodies closed 8:45 to 9, and 9 a.m. we're already starting to show more signs of strength, and that we wanted to attack the 25,000 level, and that we wanted to attack our 4-hour level, right, which that we talked about, right, which was going to be the 25,100s, okay. And so also the other area that I wanted to see delivered before 25,100 was the previous day high, which I know if you guys have followed me long enough, that's a typical area that we like to attack. And so at 9 a.m., right, this is 8 to 9, then 9 a.m. to 10, we had the massive expansion here. We deliver in this time, right, that previous day high. So let's go look at this really quick. So this area would have been right here on the 5-minute. So we have 9:05 to 9:10, then we have 9:10 to 9:15, and then 9:15 to 9:20 is when we got that delivery through the previous day high, and we started to, as you guys can see this arrow, starting to make our way up to the target of 25,100. So because I had already went break even on that pre-New York short, right, what I was telling myself was I'm going to wait for buyers, right? Because I'm always thinking from, order flow, right? I'm saying if I bought overnight, where would I set my take profit, right? And my take profits or limits, right, would have been set at that TP target that we had, 25,100. So what I told myself was like, okay, I want to see this area at least get delivered before I try to enter the trade, okay? And so fast forward to 9:25 to 9:30, we push up, we deliver the area, 5-minute candle, get the sign of weakness, and I'm thinking, okay, this might be the area that I'm able to take. So I'll kind of show what that looked like on a 5 and a 1 minute. And then I also like the timing of this here because I was like, we're going to get that 45-minute transition fall over. Now, this trade was managed the very exact same way. Now, it's executing on a 5 and a 1 minute. I wait for that 5-minute candle to close, so 9:25 to 9:30, and I like to see the sign of weakness candle. Now I want to show something because a lot of 1 minute players that play like or say they play the ICT way, they're looking for an inversion right here, right? So they're looking for an inverse fair value gap, right? Now, to me, a lot of those individuals, and I'll post some screenshots of people that I followed today that like have like 100,000 followers on Instagram and stuff like that, and some of them just take terrible trades in my eyes because I mean they wanted to see this inverse fair value gap, but they were taking the trade below the 5 minute supply candle. So like they were like still taking the trade. Essentially, they were framing up inverse fair value gaps here, right? And they were trying to get down from here, if that makes sense. Like they were trying to play it literally right here. Now, where I personally played that trade and was able to capitalize on 1.5R and still go break even on my remainder was where we've always taken the trade, right? And so essentially what happens here is we have the 5 minute sign of weakness, and then I like to look for my 1 minute mitigations or look for my chance to go 1 to 3R on the other side of that of this candle. So essentially, if you're looking at like this, right, what I'm saying is like on the right side of this, now I'm looking for areas to attack to then go down to the next supply area or next like major area, point of control or like point of interest area, right? And so what I was able to do and find on this setup was we had that candle close, and then this 5 minute candle opens here, and I waited for this candle to close right here, and that's where I entered. So essentially my first entry, I'm just showing kind of like where it is over here so you have an idea of location. When I take a trade, another reason why I don't really care for people who trade the inverse fair value gaps and stuff like that is because the location of supply and demand and things like that, you're going to need to know. And so when I take a trade on a 5 minute push-up bar, so if I'm taking sells, I'm looking for this, and if I'm taking buys, I'm looking for the same thing but just upside down. I want to be positioning myself location-wise above the 50% of the 5 minute candle, right? So like I want to be above on a 1 minute, right? Essentially if I can, or right even with it, then that area, okay? And so where I first seen the area that we could take a trade was right here. Right, I ended up taking my short right here. We've seen this candle start to close right here. I ended up entering right here, and I was looking for about a 1 to 3. Right, as you can see, that was delivered. Now, essentially, the 1 to 3 is just going to get me out of the trade for half the volume. So if I have 4 contracts, it's going to knock me down to 2 contracts, and then the remainder of the trade goes break even. And that was another good trade because, like I said, as you can see here, we delivered the 1 to 3. So it would have looked like this in a sense. Let me bring this back actually, and then we'll go to replay mode, and I'll just kind of show like what it looked like here. All right, so I came in here and I said, okay, cool, I want to get in here. I had 4 contracts on the board. All right, and I had a sell by market. Bang, right? Stop loss went to the 20-point mark, right? And then TP was actually set lower, right? It was going to be set more like the key level, right? Going back into this demand area, going back into the expansion, etc. But when we got to right here, which was my 1 to 3, what I wanted price to do was to go ahead and get me out of the market, right? And so when you look at it from this perspective here, we're in a sell, so we need to buy limit, right? Limit here, and then I set a limit for half of my volume at my 1 to 3 immediately, right? What this is gonna do, right, is even when you're wrong on the trade, as long as you're getting the right location, it's going to at least put you 1.5R ahead. And so if you're really truly risking 1.5R on your trades, like no matter where you get in, like I don't care if you get in the wrong spot, still only risk what you told yourself, you're gonna be profitable over time because you're doing the math. Love this style of methodology. Yeah, bro, and it's only getting better. I've got some stuff. I got some gems to show here soon. That's why I was kind of mad that my computer was being weird. So you go ahead and set your limit here, right? So that you go ahead and secure the bag. And then that way you don't have to second guess it. Like, oh, maybe I should or maybe I don't, or I'm going to wait for the 5R and leave the full volume on. Don't do that, right? Because here's what's going to happen. You're more times out of not, and I'm starting to see with my system, I might be looking for 3R trades and be done, right? Like I would rather take a full volume, right? Four contracts in total and hit the 3R than I would trying to wait for a 5R and then that comes back to break even, okay? So essentially this is how it played out. We want 5R, right? So we want 5R or more, And then we also had lined up for an actual target about an 8R situation, and if it halves out, which it's going to, it would be a half of that, so 4R, right? Okay, so this is how it plays out, right? Price starts to sell off, goes in our favor. Bang, right? Let's see here, going in our favor, going in our favor. Bam. Now, as soon as that area is delivered, here's what you want to do, okay? Immediately, if you're playing this system, you're going break even, okay? You're going to go break even, and now you're going to start to manage down and start to look left, right, on the 15 and 5. Like, I'm showing the execution windows, but I'm just kind of showing you guys here what this is. Now, what I want to see at this point, if I'm break even, I want to see price come down, right, from like right here. I want to see price come down and come down to the key level, right? Now, something I like to personally do when I get in a trade like this is, let's say that I have a target for, maybe I have a target, which I actually had a target today for New York low, right? So this was the New York low. I wanted to come in and get those buyers that were under this low right here on the 5 minute, because that was so choppy. And then we had that 15-minute area that we really liked, right? To see price go below that low would have been like us really bearish, okay? And so that's where the overall target was. And then my goal, as this went in my favor, right? So we already had a 3R secured, or 1.5R secured of our move. So now when I start looking at the next stage, like if price would have continued to go down here and actually reach this 5R, at this situation you have two options, okay? You can either stay break even to the higher time frame target, or you can trail by 2R, okay? So if price would have continued down to this 5R area, basically 25,000 whole level, then what you want to do with your remainder, right, is know where the, let's say the 3R, because 5 and then you're following it by 2R, know where your 3R is, and then you would trail your risk to your 3R area. That's if you're wanting to be very aggressive, right? But for me, like, all I was wanting to do was just secure the bag there and then see price potentially go where I could do what I was showing you guys, which is maybe get down to here today or back to New York Open or 24,900s. But obviously price comes back up. Good thing we had secured that 1.5R, right? Because price comes back up, hits us break even. Fine, not a big deal, right? Because now you're available to take more trades if you want to, right? And so that's essentially the setup that I took. The first one that I thought was valid, and then literally it literally happened again. Now this one I liked a lot more because of the timing, right? The timing actually was a lot better than over here, and it was set up a lot better. So price comes up, takes us out of the shorts from here, and then what does it do at 10 a.m.? Price comes up and delivers that 25,150 level again, but it's starting to show rejection, and we're looking at a higher time frame area and anticipating, right, that buyers, right, potentially will want to exit in this area, right? So I was like, cool, I'll look for this area again. It's the right time. And I could see where I could, potentially come under here, where I thought, like, okay, like imagine if you shorted here, like we did, price comes down and V-shapes recover. Now think about how many buyer stop losses are probably under this area, okay? And so like that's where my mind was here at 10 a.m. And so now when we go back to the 5 minute, all right, we had a 5 minute up candle here, 10 to 10:05, that drew on the liquidity. And then we had the 1 minute exhaustion candle, right? 10:04 going into 10:05. Something you want to take note of when you're taking 5 minute, 1 minute setups. Look in the last minute of the 5 minute candle closure, because that's when the best part of the trade is going to happen, right? And so I'm always focused on, if I'm taking a 1 minute entry, that I'm staying inside the supply candle or the location of the area that I want to frame, right? So when I show, okay, like maybe I didn't take it right there at 25,150, but I wait for that exhaustion on the 1 minute, and then I place my trade right here as soon as this 10:05 candle opens, bang, right? Now if I go 1 to 3 here, right, that was a perfect setup because the edge aligned with what I wanted in the setup. And then again, right, we want, for example, I'll show this again here, right? We want the trade to go 5R, right? Like we want it to go below those buyers that we seen, come back for us on our first attempt. But we're playing from a system, right? And so again, I did the same thing here, right? Replay mode, right? And this is out of the pocket, right? Like I had missed the buys down here during the New York session to pull this up. It just was too choppy and too, I just didn't see edge. So this is where I ended up, waiting for. And so same thing, exhaustion candle, right? Stop to the high was really good. Had a 3R marked out, which would have went right back into a demand area. I thought the 5 minute was pretty weak, right? And so I was like, they're definitely gonna take that. And so I enter here, right, with 4 contracts, same volume because we went break even on the very first trade, right? So 4 here, and then we put our stop loss right in alignment with our risk, right? And then we don't have a TP, but we do have a buy limit. So we're just cutting half of our volume at 60 points, right? And that's at the 3R spot. So go ahead and put that there. And so this really keeps you safe, right? Because psychologically what it does is it puts you in a profit, and then if price goes against you and you're wrong on the direction, at least you secure the bag, right? And so same situation here. And then our TP on this, when I'm looking at like a 15.5, I'm trying to get where price changed in the state of delivery, right? So when price destroys the people and body closes here at 9:05, like taking out the people who shorted that fast up candle at New York in the first 5 minutes, I like to play right under that area, right? And so my TP was set, and you guys can see like when I'm pointing at right here on the 1 minute is this demand candle, and then you have the key level of 950s, right? And so that would have been right under that. If you guys are looking to the left, that 5 minute down candle on the way up, that would have been right under its low, right? And so now when we look at this, we were looking for a 3R. We already have it mapped out. We know where our 5R area is, going right under these lows. We know how we're going to trail it if it does go in our favor. Now we need to know how many R is our target, right? And on average, a lot of the times, when my trade pushes past the 5R area, a lot of the times I go to about 9R, right? Like, yes, they do go some a little bit farther, like 10R and stuff like that, or we have those crazy days. But a lot of times, if it pushes 5R, it's going to go 9R. What you got to remember, most likely, if you're doing this the right way, you're cutting half of your volume to give you that psychological edge. And then what you're going to have, if it goes to 9, half of 9 is going to be 4.5. So you've already closed. If this happens right here at this exact moment here, let's show this really quick. All right, prices are moving in your favor. Bam, 1.5R secured. And now your target, right? Your actual target is sitting for 9R. So you've already secured 1.5. Now your actual target is sitting for about 4.5. So you're looking at about 6R if you can get back down to 24,950, right? Now, if you're thinking about if you're thinking about like, let's just say a combine, right? And you're looking at a $3,000 goal. Based on this system, you need 4 5R trades, right? To, 4 5R trades to pass through, okay? And so now think about those little small wins, those 1.5s add up. Now, if you're just trying to hit targets, you're not trying to stretch or be right, any of that type of stuff, stick to the same script. Hit your 1.5, hit your 1.3, look for your 1.5, and you should be break even as soon as you hit that one, right? And just be done at that. You know, if you miss out on the bigger move and it goes farther and farther, who cares? Because you wanna act on your edge without reservation or hesitation, and you want to take what the market's giving you as you're seeing it presented, right? And so that's how we played this one. Same situation. We already had 1.5R secured, and then this one comes back after delivering the price and does the same thing, right? Knocks us out for the break even on the remainder. Cool. So now think about this. That's 1.5R on the first trade, and this is 1.5R on this trade, which makes a 3R day. My goal personally is to, on average, right, like on a day in, day out situation, I wanted to have my wins be 3R greater than or equal to, essentially, right? So like I don't want anything less than a 3R day to close out a bullish day. I mean, I don't care if it's 1R or whatever the market gives, but to stay very profitable, right, and to hedge into those days where maybe you have a little bit of tilt and you go past, like you go to 3R instead of doing a 2R day. I like to keep my average winner at 3R and higher. Okay, so that's how we played the short side, and then by this point, when they came back for this, we essentially were like, okay, we know, we know that they're going to continue this higher, so there was really no reason to continue to look for anything at that point. Now, there was one other area I want to talk about on the 5 and 1 minute on the way up that I thought was a pretty good area to deliver a buy position. Okay, because I was like, wow, I could have taken this one here, and so what I seen here was 5 minute right here, 905, 910, price closes. So 905 right here, 905 to 910, price starts to close higher out of this area right here, right? So this is also right at 9, right? And a lot of times 9 a.m. presents really good price. Now, the reason why I didn't take this trade here is because I was actually looking, like I said, I was looking to see if they were going to capitulate, maybe fall. But we were holding bullish structure, 5 minute demand was set, everything was actually set really good for buys. And so what I thought was a really good area was the 904 to 905, that candle closed bullish, and then you have 905 to 906, 906 to 907, everywhere essentially on this right side of this 1 minute candle, because if you have a bullish mindset, I'm looking to play on the right side of this candle right here, okay? And so when you actually plot you have a higher open, higher close, you have this candle here, right? Let's say you played this candle here at 906 with a 1 to 3 R area, or maybe you played the one here, right? Maybe you played first here or 906. A lot of people played this one. This is what I've talked with a lot of people about this one here today. And so I thought, like, if you weren't looking for just like a 3R situation, this was awesome. And so like price runs up, gives you the 3R, we would have went break even, right? And price would have never come back to the break even here, right? Because of how it looks. And then price would have ran off for the 5R plus type of day, right? Now, granted, you would have been down to half volume, so you'd have been looking at about 2.5R, but we had the higher time frame target, which when I love to play against that liquidity, right? I like to play up to that opposing liquidity. And so we knew 25.1 was the area. So essentially why I said this was like one of the better trades I think that could have been taken today was because they never come back for the break even. You're able to play up to a target and trail your risk, right? Like 2R, like I always talk about. So the target was about 8R away. You already secure a 1.5. You're break even at this point, and then price starts to close higher here, like 918 to like 920. And now you're able to trail this. You have a target area, and you understand to like trail it. If it's an 8R target, and you're already, price is like already hovering here at 6R, you could trail this market by 4R, right? So you could trail it like right in here, or if you want to keep it closer to structure, however you want to do it. But for me, that's what I was essentially seeing. I thought this was a really good buy up, and I was kind of starting to get a little bit of FOMO at this point because I was like, wow, like that was pretty easy to see. Now, this was the one I thought this one was actually a little bit harder, but then there was one other easier one, I thought, which was prices already closing higher on the 5 minute, 905, 910. Then we have 910 to 915, right? And then watch how this works, okay? If you're bullish bias and price, let me make sure it's showing up on both windows here. If you're bullish bias on this 5 minute area and you're looking for 1 minute mitigations or 1 minute setups to the upside, I thought this was really good. Now this also almost met the 915 time. So you had your one sign of strength, and then you would have wanted to take a trade just like this on the right side of that dump candle as well, 1 to 3R, right? And this was beautiful. I mean, like it immediately takes off 1, 2, 3. You're already making new highs on the 1 minute, and essentially like right there, if you've lost a trade already, as soon as that 1 minute starts to close higher, I'd go break even, right? But if you haven't lost a trade, or if you're just still clear on the day, like this is your first trade, yeah, I'm still playing up to that target, right? I'm still gonna essentially play it just like this. So you got the sign of strength, you're in the right time, right? And so like now you have one other candle after this, I believe. And let's just say you played it. Let me go back one actually, because I would have played it right after the sign of strength. And so say you played it here, same way. We buy, right? Buy, and then market. 4 contracts, all right? Now, this would have been, I'm going to mark it to where they have it, just to be safe here. same stop loss, about 20 handles, and then the same thing on the upside, right? Is you want to go ahead and map out. Since we're in a buy, you're going to go ahead and do a sell limit, right? Half of your volume. So it's going to go to here, right? Place that there. And now you start to know your upside target, which is 25,100, and you start to know how to scale that. But this is just how to frame this up, okay? And so immediately you start to see liftoff, right? And now you're starting to see the bodies actually close a little bit higher. One more candle closure like this, right? And essentially, like if you wanted to just slide your risk, is what I'm saying, like to right under that low, I would do that, because you're moving closer to the partial regardless, and you're going to go break even there anyway, right? And so that's essentially what I'm saying there. So right now, though, if you want to stick to the script and let the probabilities play out, let it just get up to the area, right? Bang, delivers your area. Now you're break even, okay? You can do it really close. You can do it like right here, however you like to do it. Just make sure you're break even with a little bit to focus on the fees. And then now we're looking for that target, okay? So 1 to 5R still doesn't deliver that target. I think about a 1 to 7 is what delivers, 1 to 6. Now we're half volume, so essentially when you're looking at this number 6, you're looking at 3, right? So you've already secured 1.5 and then plus 3, so that would make you at what? A 4.5R win on the day. That's better than 3R. Anything better than 3 to 3.5R, and that's a great win for me, okay? And so now, as you're delivering the TP, you can do two things. You can just say at that pocket of liquidity, right, on a 1 hour and a 15, so like a higher time frame like this, at that pocket of liquidity as we're moving into this area, you can just set your TP for that area if you want. Like you don't have to go any farther than the area. Like if you don't think it's going to go any higher, and sometimes they come and deliver a pocket of liquidity like this and just fall over, right? And so I thought this was a really good trade. The TP on this would have been still for 481. So regardless of what the numbers are, it's going to be a 6R. So you're securing 3R plus your 1.5 you already secured on the way up. You're break even and you're psychologically fine. Like you're feeling good because you're like, I'm in flow. I'm trending. I'm making higher highs and higher lows with the market, and you've already psychologically took yourself out of being able to lose. Okay. And so price does go up, obviously, and delivers that TP. And I thought that was a really good trade, even though, right? Like, even though, the location of that one seems more like it's an expansion. But to me, what I would say is when you're taking an expansion trade, you're looking for that continuation type of edge to be able to play to get to the target. Okay, so that's pretty much what I've seen from today. The two areas I showed were the areas that I attempted and was able to still squeeze out a small profit, but essentially we weren't on the right side because we were very bullish overall, and we just didn't see any buy potentials when we were down in here because of how choppy it was and just eating people up. So I hope that kind of helps out with some of the stuff that we seen. Like I said, we sold in here first, came back 1.5, did the same thing here, came back 1.5, and then I went over the two buy areas. I think I like this one more because of the timing, and then this one was actually still not bad because of timing. It just would have been harder to frame, I think, from a psychological standpoint, okay, because it's still inside the main meat of the range, and they haven't delivered at this point. Well, they have delivered a new high on the 1 minute, but it was still in the main meat of what we were trading, so it would have been a little bit more difficult. But this, it's like, okay, cool, I've got confirmation that we've extended higher on the 5 minute, and now we have a dump candle, sign of strength. I'm definitely going to play inside that second candle to extend up to that next target. So I'll figure out what's going on with the technical difficulties on some of this stuff. I don't know what was going on, but we will be back again for a trade review either tomorrow or Friday. So appreciate you guys watching, and talk to you guys a little bit later.